Hello, good morning, and welcome back to LearnCity. We are glad to have you back on our channel. Today we will be discussing the topic of expense ratios for mutual funds. An expense ratio reveals the amount that an investment company charges investors to manage an investment portfolio, a mutual fund, or an exchange-traded fund, ETF. The ratio represents all of the management fees and operating costs of the fund. The expense ratio is calculated by dividing a mutual fund's operating expenses by the average total dollar value of all the assets in the fund. Expense ratios are listed on the prospectus of every fund and on many financial websites. A number of factors determine whether an expense ratio is considered high or low. A good expense ratio from the investor's viewpoint is around 0.5% to 0.75% for an actively managed portfolio. An expense ratio greater than 1.5% is considered high. The expense ratio for mutual funds is typically higher than expense ratios for ETFs. This is because ETFs are passively managed. The assets held in them are selected to mirror an index such as the S&P 500, and changes to the selection rarely need to be made. A mutual fund, on the other hand, is actively managed. The assets in them are constantly monitored and changed to maximize the performance of the fund. Expenses can vary significantly between types of funds. The category of investments, the strategy for investing, and the size of the fund can all affect the expense ratio. A fund with a smaller amount of assets usually has a higher expense ratio due to its limited fund base for covering costs. International funds can have high operational expenses because they may require staffing in several countries. Large cap funds with an average expense ratio of 1.25% are typically less expensive than small cap funds, which average 1.4%. Fund expenses can make a significant difference in an investor's profit. If a fund realizes an overall annual return of 5% but charges expenses that total 2%, then 40% of the fund's return is eaten by fees. That's why investors should always compare expenses when researching funds. A fund's expenses will be listed in its prospectus and on the company's website, and can be found on many financial websites. Thank you for watching and stay tuned.